Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of our recently closed trade ID number 171 on ALK, which is Alaska Airlines. It was in our Volatility Strategy, and it was a Strangle. A couple of things I want to highlight in this trade review. First of all, over here where you see the equity curve, we do a mark-to-market every night of the position, and this shows you the nature of strangles. They're not the type of position where you get a gain and you continue to build on the gain until you reach a profit target or a price target in the stock and then you close it out. They are by the very nature time decay sensitive and therefore reflect a loss until the stock actually makes the breakout move that you're looking for, and then you take the gain. So this type of chart is very commonplace in strangles. The other thing that I wanted to highlight is this is a good example of our adjustment process that I talk about quite often that we utilize at Elliott Options. We entered this original alert sent out to our subscribers on January 28th, and you can see from the chart pattern we had a very nice descending triangle pattern, very low ADX. I like the low ADX in the triangles because that tells you that, boy, this has been consolidating for quite a while. The likelihood is a breakout is coming sooner rather than later. So we had the nice descending triangle pattern, support there at 65, and then look down at that spike down around the 58 level. So there's support down around 57, 58 as well. So that would be an initial breakout target. Well, as I'm sure you're probably aware, with an entry after January and what happened with the coronavirus, we did get a big breakout move. So here's the chart to the downside, and this is where we closed the puts. Now we held the call, closed the put, and you can see where we're trading. We're right down there at that 58 level. So we're right at that area of support, and look at where the stock is actually trading in relation to the 10-day moving average. Again, say it over and over again, no security in any time frame gets very far away from the 10-day moving average. So we're quite a bit oversold at this point in time, and we're sitting at an area of support. So the decision was made, let's hold the call option. It didn't have too much value, and with the potential to bounce from such an oversold condition with plenty of time left in the position, let's go ahead and add to the calls. So we decided to send out another alert adding to the call, so the setup was the same chart. Well, things didn't quite go as we had hoped. There was no bounce to the upside. In fact, if we look at this chart here, you can see that it did go through and consolidate a little bit, but the move was further down as the airlines pretty much shut down. Nobody was flying in the height of the coronavirus. With all the airlines, it continued down lower, so the calls expired worthless. So at this point in time, with the added money back in on the calls, we're at about an 80% loss in the overall position. So we could have just taken it, take the loss, move on, but we set up for another pattern. Now looking down here at the DMI, I mentioned that I like it when that ADX is lower. It's not that low in this case. However, this is my absolute favorite breakout pattern. If you've listened to many of my recordings and many of these trade reviews on strangles, you know that my favorite breakout pattern is when you get a vertical move, can be either up or down, followed by a consolidating symmetrical triangle. Those just tend to move. So rather than just saying, okay, we take the loss, we accept it and move on, we have another pattern, so let's adjust it, stay with it, and we added in another strangle. So this time the stock does break out significantly, and on Friday, June 5th, you can see that we had a big move to the upside. We actually were able to close this out closer to the high. You can see it closed near the low of the day because it was starting to get too far away from its 10-day moving average, so it was getting into overbought condition. So with the adjustment process, instead of taking an 80% loss, we were able to realize a 51% gain. The interesting thing about this is those that were in the original alert and stayed with it all the way through realized that 51% profit. We're adding subscribers all the time. So those that came in weren't in the original alert that had a loss attached to it, but just caught the adjustment, which we do have subscribers that follow along with just the adjustments depending on their timing of subscription. They enjoyed a nearly 100% gain. 90+% gain on there. So it was a win-win for everybody. And again, good example of the nature of a strangle as well as our adjustment process at Elliott Wave Options. Hope you found that informative. Be back to talk to you again next time. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.